As part of a kickoff meeting with one of our favorite super regional carriers, we got insight on their rate forecast for different lines of business. This insight might help you have productive conversations with your clients. They expect property rates to level out faster than casualty rates because there are more levers they can pull to get profitable with property. For example, beyond just raising their rates, they can increase deductibles or require ACV on older properties. With casualty, they don't have levers like that. They're at the mercy of judges and juries to properly interpret the policy language or to be reasonable when awarding verdicts. Unfortunately, social inflation continues to be out of control. So the only way an insurance company can address the additional losses is by increasing rate. While they expect property rates to level off sooner rather than later, they expect casualty rates to continue higher for several years as they chase the rising costs of social inflation. They also mentioned that the biggest reinsurance companies are in Europe, and they're very concerned about the direction our court system is going. As an example, one of the underwriters that they were working with from Germany had mentioned that he had a $100 million limit of liability for his personal auto. And when the CEO of this super regional said, golly, that premium must be outrageous, the underwriter said, no, I pay about 500 euros per year for that policy. It's just that our court system is never going to allow an award that will come close to that $100 million limit. The good news is that some states like Florida and Georgia have worked on legislation that could help. For example, in Georgia, they may allow insurance company to notify the jury when a lawsuit is backed by private equity. Changes like that can go a long way in bringing down insurance costs and encouraging carriers to do business in states that make similar changes. Hopefully, more is done on that front soon. But meanwhile, we as agents need to do a better job educating clients so they can be better jurors. This same carrier also shared that they were recently told by some consultants several times that they should introduce some products that can be sold directly to the consumer and cut out the insurance agent. The consultant kept bringing this up. And so the insurance company finally had to say that if they were given the choice between not writing a line of business at all or selling it directly to the consumer, they would choose to not sell that line of business. That's a really encouraging strategy given the rapid changes we're seeing with AI and its ability to influence consumer behavior. So here's the takeaway. As you place business, remember to take care of your super regional carriers. Give them the business that they are targeting, and when they tie with a national carrier that sells direct to clients, reward the super regionals who are dedicated to working with agents like you.